Hello, everyone. Welcome to the first episode in a small series on climate finance. I'm Nishant Malhotra, the solo founder of The Middle Road, a for profit, social impact driven platform as a service startup focusing on the global development and financial services sector. Now, in this series, I share a perspective on how climate finance is changing our global social and business ecosystem. I also hope to feature guests on this topic. Today, I'll introduce climate finance, talk about a major actor in the sector, discuss a milestone in the ESG sector, and chat about my business consulting initiative. Check out www.themiddleroad.org for online courses, reads, and podcasts on ESG and sustainable finance. This may also include material posted on the Middle Road. To learn more about my startup, visit, I've already spoken about it, but if you want to look at the business consulting initiative, you could check out www.themiddleroadbusinessconsulting.com. Let's start with what is climate finance. Climate finance is a subset of sustainable finance or sustainable investing that focuses on climate action. It involves investing in technology, products, or services that address climate mitigation and climate adaptation. Climate mitigation includes investing in projects or technologies that reduce greenhouse gas emissions, for example, clean tech or clean technologies. They are an excellent case of climate mitigation. When discussing greenhouse gas emission, carbon dioxide and methane gas are often the main focus, while other gases like nitrous oxide are sometimes overlooked. There are other you could read. I've discussed in newsletters more about greenhouse gas emissions. So you could look at all the breakup. Climate adoption, on the other hand, focuses on projects or technologies that help adapt to climate change by building resilience, such as flood banks that serve as a bulwark against flood. Climate finance also includes capacity building for organizations working in climate action sector. Climate finance tools include financing clean tech technologies and innovative social financing tools like sustainable development bonds, as well as green, blue, sustainability, and sustainable development bonds, which I spoke about. Blended finance, which was something written quite a bit on the Middle Road, is another tool that has become popular for financing both social and environmental interventions with remarkable impact. Now, IFC, a division of the World Bank, often uses this financing mechanism to blend private and public capital as a part of its agenda of attracting private capital within sustainable development. Carbon markets, including carbon pricing mechanisms such as carbon taxation and emissions trading schemes, are other innovative tools. The EU is the first region actually was to implement an ETS structure, which I spoke about. The EU region has been a global leader in best ESG practices and a powerhouse of innovation within the climate finance sector. United States, California also implemented its own ETS known as the California Cap and Trade Program. The world has come a long way in carbon markets. About a decade ago, carbon pricing policies covered 7% of global emissions. Now it's about a quarter, according to the World Bank. Now in 2023, revenues from carbon markets and various innovative carbon pricing schemes and instruments reached a record $104 billion. China has implemented the largest ETS in the world, covering more than 5 billion tons of carbon dioxide from more than 2,200 fossil fuel power plants, according to International Carbon Action Partnership. Many countries have carbon pricing mechanism. For example, Indonesia is implementing a carbon pricing mechanism similar to the emissions trading system ETS, which I spoke about for specific sectors. The Indian government is exploring the possibility of implementing a carbon pricing mechanism in the future. This is a positive step towards reducing greenhouse gas emissions and combating climate change. As this series progresses, I will discuss an excellent example of climate finance, which is results-based climate finance. Now keep checking out the Middle Road I spoke about to read about various social financing tools. There's also an online course on impact bonds. I highly suggest that you enroll. You can check it up under the online courses section. Now let's come to actors within this sector. There are many actors within the climate finance sector. Multilaterals play the most critical role. Now, others include governments and public institutions, asset managers such as impact investors, pension funds, venture philanthropists, and corporates. Equity and debt markets are the marketplace that focus on facilitating climate finance. Investment products include equities, fixed income, ETFs, and private equity extra, which are just some of the investment products within the climate finance sector. Insurance products and derivatives are other products used within climate finance. An excellent example of parametric insurance is catastrophic or known as cat bonds. Now, I have the cat bonds have been covered on the middle road. You could check it up under the insight section. Catastrophic bonds, just to sort of tell you in a nutshell, are financial instruments designed to transfer risk to a third party when an event strikes, such as an earthquake or tsunami. Now, Chile, being prone to natural calamities, has opted for insurance against these events. The World Bank created cat bonds specifically for Chile, serving as insurance against the aforementioned events. This was a 630 million financial structure comprising 350 million cat bond and a 280 million cat swap. You could refer to the educational read on cat bonds on this topic on the middle road. Let's begin with the multilateral, which I was talking about. Now, whenever we talk about development banks, one of the major or the most significant would be the World Bank. This is the largest in the development sector. Other multilaterals would include International Monetary Fund, IMF, Asian Development Bank, African Development Bank, European Investment Bank, Nordic Development Bank, and Inter-American Development Bank, among others. So these are just few. There are also others. So just wanted to name a few of them. The World Bank is a significant enabler alongside the IMF within the international development sector. Headquartered in Washington, D.C., USA, the World Bank is owned by 189 countries, which also serve as its clients. It is one of the world's largest sources of development finance. The exact amount of loans outstanding and the number of countries can vary, so it's best to check the most recent data. Bank's mission is to end poverty on a livable planet. This is sort of the main, mission of the World Bank. And the largest shareholders are US, Japan, China, Germany, France, and the UK. The bank has 5 divisions. The most two important divisions are the International Bank for Reconstruction and Development, which is IBRD, and the International Development Association, IDA. Others are IFC, which is very important. IFC will keep coming to IFC, which is International Finance Corporation. The MIGA, which we say Multilateral Investment Guarantee Agency, and International Center for Settlement of Investment Disputes. The World Bank raises capital to its member countries. The private sector are under financing activities. Since its inception in 1944, the World Bank has financed more than 20,000 projects through IBRD and IDA. These divisions are separate entities, and IBRD, IDA, and IFC are rated AAA. There's going to be a small business model which I feel I would be able to get in the video version. I'll try to see how we can at least have business model which is actually mentioned by the World Bank, that you can look at it. IBRD is the original member of the World Bank group, established to rebuild Europe from the devastation of World War II. It soon came to be referred to as the World Bank. From 1960s, the bank started focusing on elevating extreme poverty. IBRD now finances loans to the middle income countries. IBRD issues World Bank bonds. To date, it has raised about $1 trillion in capital, with a major share loan on to middle income countries at concessional rates. It has issued sustainable development bonds targeting environmental and social outcomes. IBRD is a major climate finance champion. 92% of all the projects financed in 2023 had a climate finance component. Now, this has been taken from the World Bank bonds for sustainable development. Now, IBRD is a major climate finance champion. 92% of all the projects financed in 2023 had climate finance component. IDA, on the other hand, issues bonds and provides grants, mostly concession loans to lower income countries. Its key focus is on social sector, particularly vulnerable sections of the society. It is financed through its member countries, and since 2018 through bonds issued in the capital markets. Both IBRD and IDA share an overarching mission of removing poverty for a better livable planet by financing projects in the sustainable development sector. The bonds and the loans target social themes such as health, jobs, gender, education, climate, and fragility. Environmental themes include pollution and climate change. The multilateral institution earns money through interest on these loans and through advisory and consulting services. IFC promotes development by financing private sector enterprises in developing countries. It is the largest multilateral attracting private capital for the development sector globally. Now we come to a major ESG milestone. I'll discuss MSCI KLD 400 Social Index. CI KLD 400 Social Index is the first equity index linked to it's a socially responsible index. This index marked a cornerstone for the intersection of ESG, which is environmental, social, and governance, and financial markets. 1990 is the year ESG received the major boost is when this index was launched. This is the first step in the transformative journey of sustainable finance. May 1990, the MSCI KLD 400 Social Index was listed. The index consists of about the largest 400 US companies by market capitalization with an outstanding ESG rating. The index does not include companies that have a negative impact. As of May 31, 2024, Microsoft, Nvidia, Alphabet A, C, and Tesla were the top 5 companies in the portfolio. Information technology, financials, and healthcare among the top 3 sectors of the company within this index. I'll speak a bit about the business initiative I've launched. This is this is the consulting initiative which I spoke about. Middle Road Business Consulting is your one-stop solution for a comprehensive range of consulting services tailored to your organization's needs. My expertise actually spans across various domains, which is a separate initiative from the Middle Road is the ESG and ESG investing. I can help you navigate the complex landscape of ESG factors to make more informed investment decisions and enhance your organization's sustainability profile, social and impact materiality. I assist you in identifying and prioritizing the social and environmental issues that are the most relevant to your stakeholders and your bottom line, enabling you to create tangible, long-lasting impact. Now, there are other various initiatives like venture philanthropy and capacity building. You could look at the site www.themiddleroadbusinessconsulting.com. You'll have a much better idea. You could also write to me at Nishant at the business consulting, the middle road business consulting.com, or you could also write to Nishant at the middleroad.org. Main idea you could write to is Nishant at the middle road businessconsulting.com. Coming up, I wrap up today's session. We'll just look at renewables at a glance. According to International Energy Agency, IEA, the global annual renewable capacity additions increased by almost 50% to nearly 510 gigawatts in 2023, the fastest growth rate in the past 2 decades. IEA estimates China to have almost 60% of the new renewable capacity expected to become operational globally by 2028. The World Bank has estimated that government globally are increasingly deploying increased subsidies within the energy sector or within the green energy space, I should say. The key focus are clean technology and faster adoption of renewables. China and US are the lead in givers of the subsidy programs, followed by Australia, Canada, and the European Union, the EU. The proliferation of electric cars is driving increased investments in EV adoption along with climate initiatives. Battery market is going to see a significant boost. According to the Renewable Energy World, the 112 billion battery market is going to grow by almost 400% and it's expected to reach 546 billion by 2035. China is a world leader in solar adoption like the EU, which is leads in wind power. America, on the other hand, being the first country to drive innovation within the renewable energy is lagging, but of the late, the renewable space is doing well. In the US, America's total solar capacity has officially surpassed 200 gigawatts, and according to Solar Energy Industries Association, it is expected to double over the next 5 years, growing to 438 gigawatts or even more. Come to an end from the first edition on the podcast within the climate finance series. I hope you found it to be useful, and feel free to reach out to me for any